In this presentation, we will add a credit card account to our chart of accounts as well as the beginning balance related to it within QuickBooks Online. Here we are in our Get Great Guitars file. We're going to take a look at our balance sheet. Let's think about our objectives. So we're going to go to the reports down on the left. We're going to be opening up our favorite report, that being the balance sheet report. Up top, going to be changing the dates up top to 01/01/20 to 12/31/20. That's going to be the current year that we're going to be working on, putting new data into. We're putting the beginning balances in there as of the first day of this period or the end of 2019. We're putting the data in as of the end of 2019, so it's correct as of the beginning of the period that we're running, which is January 1st, 2020. So now we're going to think about the credit card account. It's going to be a liability account. So again, we're kind of imagining we're looking at our prior balance sheet and we're saying, all right, we've been entering every balance in here and the other side's been washing out to equity. Now we're going to be entering the credit card balance. So to do that, we're going to go back to our chart of accounts. Before we do, let's go ahead and duplicate this tab. So I'm going to right click on the tab up top. We're going to duplicate that tab up top. Then we're going to go back to the tab on the left up top. And then we're going to go down to the accounting. So we're going to go down to the accounting once again. We want to be on our chart of accounts. We want to be in the chart of accounts. We are going to be adding a new account. So if we scroll back down, note that we're in the liabilities section. So I'm going to make this one a little bit wider. Actually, no, we want to see the types. So it's going to be in order. Assets, liabilities, equity. So bank accounts an asset, accounts receivables an asset, other current asset type of accounts. Then we have the accounts payable account. That's our liability account. Then we're going to add a credit card account. So we would expect once added, the credit card account will appear in our chart of accounts right about there. That's right about where it should be. So let's see if that is indeed the case. We're going to go back up top and do the similar process we did as we did last time with the checking account, adding a new account. So we're going to add a new account. This time with the drop down up top, it's not going to be cash on hand. It's not going to be a checking account. We're looking for... Notice there I had the screen zoomed, so I went out of that window, and because I had the screen up to 120, and I hit the new button, it didn't have quite the same options. So if that happens to you, close the screen, zoom it back down to 100% here, and then add the new button. And then you should have the proper looking screen, hopefully. So now we have the account drop down that looks more like it should here. So we have the bank account. Last time that's what we chose. We're not choosing that this time. What we want is a credit card account. So we're going to pick the credit card account. And you do want to pick a credit card. You could pick, other current liability. But once again, the credit card account could have different basically functions to track the credit card. The credit card has specific things you need to track because of course you want to be entering the transactions and you want to be entering the payments and have the outstanding balance be tracked within the credit card account. So here we have the credit card account here. We've got the name. Everything looks good there. Now, if you have multiple credit cards, you probably want to call it either like credit card account and then, American Express or Visa. Once again, you may want to put the last 4 digits of the number or something here if you want to have multiple accounts. The credit card account will be under not a sub account, but the type of credit card. So you can have a drop down, kind of a drop down thing that will on the balance sheet as we did with the cash that will then show the credit card. So if you have multiple credit cards underneath it, it's nice to have the number on the credit card because then you can more easily track which credit card you're looking at, basically using the balance sheet as a chart of accounts to go back and forth with while still being able to minimize it so that when you print reports, it just shows credit cards rather than the more detail, which you may want to report then to somebody else without having that kind of the messy stuff of having an account number in your balance sheet. So then you can have description here, sub account. Once again, you could put it at another sub account. You could call it credit card as the parent account and then have multiple credit cards underneath it. However, that may be redundant because on the balance sheet, as we've seen, it'll be kind of grouped in that format under basically the type of account, which the account type is credit card. Then we're going to say the balance is going to be 1,000. So we're going to say, where did we get that number? We're imagining we're looking at the prior balance sheet, and on the prior balance sheet, we saw $1,000 in the credit card statement. So we're going to have to tie out to whatever's on the balance sheet to get the balance sheet in balance. If we're working from a prior system that we're inputting into this system, then we're going to have the similar kind of problem where we're going to have to basically reconcile that outstanding balance to the statements in a similar fashion we had with the bank statements. So whatever our credit card statement is, we're going to have to reconcile in some way, shape, form to the amount that we're going to put here on the balance sheet. So, and we're going to put this as of 12/31/19, same strategy. Whatever QuickBooks does with the other side of this account, we don't want it messing up the current temporary accounts, the current profit and loss reports. What will QuickBooks do when we do this? It's going to increase the credit card. That makes sense. What other side could it be hitting? If it's what typically would increase a credit card, they might put the other, you would think normally it would be an expense that we would, but so maybe the other side they're going to put to the income statement or to opening balance equity. Doesn't matter, because even if they put it in the income statement, it will then roll over to retained earnings in January 1st, 2020, which is where we want it to be anyways, and the income statement for the period we're working on will be clean. Let's take a look at it. We're going to say save and close. Then we're going to go back to, let's scroll down and see where it put it. See if we put it in the right spot. So it's right there. It's right under accounts payable, just as was suspected that it would be put there. So then we have our two liabilities. One's the accounts payable. There's the credit card, and more specifically under the account type of accounts payable, and then credit card. Let's then go to the balance sheet and see what happens there. I'm going to go ahead and refresh the balance sheet. I'm just going to hit enter on the URL to refresh it. It looks more fresh now, so I'm going to then hold down control. I'm going to zoom in a little bit back to 125. We can get rid of the hamburger over here too, give us a little bit more room. Scrolling back down, and then we have in the balance sheet accounts, we've got that credit card. So there's that credit card for $1,000. It's under, of course, the liabilities section. You'll note that we can basically minimize the account type. So it's under the account type credit cards. That's the account type we set up. We have one credit card within it. So you can go back and forth to this credit card account, use it as a chart of accounts, give yourself that more detail of the 2244, and possibly then generate reports in such a way that you'll collapse the credit card to not show if you're providing the reports to somebody that just wants the overall financial information and not the detailed information of the actual credit card and the number related to it. So that is that. If we go into it, then let's see what it did. What did QuickBooks do with a journal entry? We're going to have to go back to 2019 because that's when we entered it as of. So I'm going to change the beginning date to 2019, and then we'll run that report. Then we have a credit card expense. That's going to be the account type that it was using, a credit card expense. And for $1,000, the other side, it looks like is going to opening balance equity. So that's good. Didn't put it on the income statement, but either way, it wouldn't matter because we have set it up in such a way that it won't. So we're going to open that up. We have the expense, so it's going to be set up the expense here, and then it put the other side nicely to opening balance to the category of opening balance equity. So we have an expense, basically data input screen, but we didn't enter an expense thing. Yeah, that's fine. That's what QuickBooks does though. When they typically will see the credit card going up, the liability would go up. Why? Possibly because you have the form of an expense. Other side going down here, rather than to an expense type of account, such as telephone expense, utilities expense, and so on, they put it to opening balance equity as the account. So let's close it out. Let's take a look at opening balance equity again. We're going to go back up top, and we're going to go back to our reports. Let's go back to our reports. Let's scroll on down, and it looks like they put it into opening balance equity. We're going to open up opening balance equity. And then scroll back up top. We're going to change the date to 2019 so we can see the current data that is in there and see if indeed that account was put here. There it is, the credit card expense. So it does look like it's in opening balance equity for the 1,000. So this is all the stuff that, again, QuickBooks is basically just washing it out to equity. So it's just everything's washing out to equity in some way. And if everything washes out to equity, then equity will be correct after we put all other balances in there correctly. So if I go back to our balance sheet, once again, we're going to put all these other accounts in there in accordance with whatever balance sheet we're working with to enter the beginning balances. We're going to put the assets in there, the liabilities in there, and then equity will wash out one way or the other, and then we'll clean it up by just simply taking whatever's left in opening balance equity and closing it to retained earnings. In other words, equity as a whole, that equity will be correct. The sub-accounts of equity won't be as nice as we would like them, and we'll just resort them, at that point in time. So we'll do that later. If we go back to the prior tab, again, remember you'll have a similar problem with the credit card in that you've entered the credit card and it'll be right. We had to put on whatever we needed to do in order for the balance sheet to be in balance. So in other words, whatever that balance is, that's what we got to put there. If it's on the prior balance sheet and we're trying to make something that's in balance for the beginning balances. However, we also have the issue of needing to tie it out to the credit card statement. So if there's an outstanding balance, we want it to basically tie out to the credit card statement. So typically what you're going to see with a credit card, if we go into it, you could use basically the register to do this. So if I went down to the register and I go into the register, then and for the credit card, I'm going to open up the register for the credit card here. And then you got something that's going to be similar to what you normally see in a bank statement, where it's got the kind of the increases and decreases to the account. So I'm in the credit card account rather than the bank account, and you can basically put the charges and the payments in here. So if you had the credit card statement, then those would typically be charges, and you can increase the charges. And then the other side, when you go down, is going to be a payment, and the payment you can either enter here, or you can enter it back on, you could just basically write a check or enter it in the checking account register. And after you enter it in the checking account register, which is what I would typically do, then it will appear over here as well, because this is the other side, and the payment will of course be decreasing the balance. So that's what you kind of want to do if you have a running balance in the credit card. If you haven't paid the entire credit card off, then you're going to have to take the credit card statement in some way, enter it into our system here. You could just manually take the credit card and enter all the increases in as charges, and the other side go into whatever related account, utilities, phone account, whatnot. And then when you make the payment, typically out of the checking account. You write a check to the credit card company, Visa, American Express, and the expense account, you don't expense it to credit card expense. Rather, you put the other side of the account, when you write the check, the other side of the account is going to go to this account, a liability account, which will then decrease the balance, hopefully, to what appears on the credit card statement as the outstanding balance.